from WBRN Radio and on the Bostonred Network. The episode Numbers Man, known as the Numbers Man show, on many of the destinations that you get internet radio are the commercial name podcasts. They're out there. iHeart, one of the largest, no doubt about it. That is internet radio. They have free music there, and they also have podcasts. And you can get them, of course, at iHeart.com. We encourage you to go there, subscribe to the cast. The same is at Twitter, at Stitcher. Stitcher is a mobile platform. Very good platform. You can get it anywhere in the world. On either the Android platform or other platforms, period, or on a desktop, wherever you are. And those are out there for you and various others. Our aggregator, Spreaker, which you can find us in Europe, you can find us in North America. The Google Podcast Enterprise, we are there, and you can find us there also. So there's a number of them. There's Cashbox. There's just too numerous to name, but you can find us in Europe, in Asia, and across the collective African continent. We are there, and we try to cover as many regions of the world as we possibly can here on Numbers Man. That is our macroeconomics program. We partner with Cranston Analytics, where we do the modeling. And on this particular episode, we'll talk about the big topic, world topic, the coronavirus virus, and see where it is in the world. There are some models coming out in Australia. They are modeling it. Now, the last virus that was out there was the SARS virus. That was in the early 2000s, 2003, and the number of people infected with the coronavirus has already surpassed SARS. But now a word there is that we have better detection methods today than at that time, and the modeling is totally different today than before. But increasingly, this particular virus is looked at not only in terms of the medical, which would be the social and somewhat the geopolitical outcome, but the economic outcome as to how many people are stricken, the various quarantines in with the airliners. They are canceled flights. Of British Airways no longer going to mainland China. Some other airlines, international airlines, have restricted flights to inland China. The city of that it started in, Wuhan, is under quarantine. Public transport is very limited there. And even Hong Kong, they have the border crossings between it and mainland China has been slashed. Some of the high-speed trains, ferries, will be suspended starting on Thursday. And of course, the person in charge there, Carrie Lam, wore a face mask. The makers of face masks, of course, have been doing very, very well. Now, the numbers that we are getting, 130 plus people have died, and 6,000 have been stricken. Now, there are models out there that are looking at this, and from Xi Jinping himself, the leader of China, it will only get worse. It has not peaked as of this particular broadcast. We're on the 28th of January. I guess I didn't announce that. 2020. But our broadcasts, particularly with economic news, are not as time sensitive as you would think, but a lot of the numbers are pretty much standard. What's happened with the markets, with the news of the coronavirus, the markets were down the beginning of the week on Monday, and now they've somewhat stabilized, and expect that. Now there's a pattern with the markets where it be the coronavirus or the inversion. There was an inversion, skipping around here a bit, are just disappointing earnings. We get this up and down motion out there. Congressional Budget Office reporting that the deficit this decade, 10 years, will run about $1 trillion a year. Now, what that translates to is that it's the highest deficit the U.S. has ran since the Great Patriotic War of World War II. The debt there was enormous. Now, obviously, in World War II 40s dollars, it would be $2 trillion plus dollars or more. So it does go up. It's sort of like, as far as much of the policy in this country, I know I'm skipping around a bit here, but the economist Nobel Prize winning Paul Krugman has a book arguing with what he calls zombies. Doesn't translate there. But the whole trade matter, while we're doing the introduction here, is overblown. That's what we've been talking about this from our mic. Dr. Krugman, 2/3 of the economy is not trade. So at least for 33%, a third of the economy involves some type of trade, and that's what he got his Nobel on, was trade. So he does have the facts as far as trade. Healthcare is much more important. And if we look at some of the sectors that are affected by trade, manufacturing being one, a very small percentage of the economy, farming being another very small percentage of the economy there. So those factors, the energy sector was affected, but again, this is a commodities type of setup. In general, petrol went down and now it is back up. We'll look at that and see where it is, but basically the rule here is that these things are factors, be a little more scientific here, are trade-offs, and the psychology of the market at this point in time is basically, well, we wake up each day and we see something occurring and we go with it, and then the next day, well, we'll make it up. A good example, Tesla, big deal going there with the option traders. Many have bet against Tesla, but Tesla bounced back, and now the people that have shorted it are in a little bit of trouble. But at the same time, other automobile makers, incidentally, the profits of Tesla has passed a Ford and a GM in the U.S., but you've got also a situation whereby Ford has its electric Mustang, and various other automobile makers are entering the electric electric car market. So you're going to see more competition, and as you get more competition in, and Tesla moves from making its boutique automobile to one that is more priced to the quote-unquote masses. It won't be the VW Bug, but at the same time, they will all become much cheaper as models come onto the market, various models. And now this, you look at this as a global situation that we are facing here. Let's get to this coronavirus, and we have from the BBC talking about what happened in Hong Kong. Now, incidentally, in Wuhan itself, basically, according to the officials there, the authorities, roughly 5 million people. This is a city area of 11 million people. That 5 million had already hit the road, so to speak, or by rail, plane, or whatever. And if that happens, it is very, very difficult to contain anything because they really don't know about the incubation period with this particular virus and how much it has spread. Now, in the days of SARS, the reporting factors, there possibly was people died from it that were never counted as dying from it. But now you have better counting than before with big data period. Now, when we look at Hong Kong here, is to tackle the virus with suspending trains, ferries to the mainland. It's a city of 7 million. Hong Kong, very small city, major financial center. And, of course, tens of millions people visit mainland each year, but the numbers were down in 2019 because of the pro-democracy protests here. And the flow of people between two places need to be dramatically reduced. That is from the Hong Kong boss, Lam. That's the South China Morning Post newspaper. And these numbers, incidentally, will change, and they continue to change. And then the province that it is in is Hubei, I suppose, province that is where Huang is. A total of 60 people, according to this report, have been discharged from that. And it appears they have an ordinary mask on that sometimes we wear around, nothing exotic. Now, in Beijing and Shanghai, they have a 14-day observation period for people arriving there. This is several of the measures they've taken. The authorities postponed new semesters for universities, so it does have a financial component here. The China Railway Group suspended hundreds of trains throughout the country. Immigration Administration encouraged citizens to reconsider foreign travels. And even at airports in the U.S., you see a situation that people are confined. In fact, Australia, it was announced that their people that are returning will be quarantined on Christmas Island. That's about 1,500 or more kilometers from the rest of Australia. So these cases here seem to be insignificant, but at the same time they are. And picture the virus here on the one I'm looking at. What's new with the coronavirus? Well, the virus itself is a new or novel virus, a family that normally affects animals. Now, this is the jump from animals. The effect of the coronavirus family on humans has long been observed mainly in the form of the common cold in recent decades. More serious coronavirus like SARS and MERS, they have deadly, no doubt about that, period. And people are rushing there to investigate it. Let me just move around a little bit here, and we'll get over here to, I think we have this, yeah, we don't. I thought we did. But basically, the models are running. Some prognosticators think that it will, in fact, derail the Chinese economy. Some will not. Some models we've seen up to a point could come off of China, and we don't particularly know that this would occur. We are looking at it, and we'll see. It's very inconclusive at this point in time as to where the effects that it will have on China and potential global economic effects here. And this is from NPR, and we are looking here on the 27 when this came out. Period. Sell-offs coming. The Lunar New Year, we had mentioned that as one of the big things that is happening here. Period. And they had an economist here, Frieder Beamish, chief Asian economist at Papillon Macroeconomics, worries that the quarantine comes too late. No doubt about that. Many people have talked about it going on here. And the Nikkei, of course, has suffered a drop on Monday, worse than 5 years there, and European markets. Also, the Dow, 450 points that it went down. And in this interview here, that really a lot is not known. Now, SARS, that was in 2002, 2003, which killed more than 700 people. And some people are saying this particular virus is less severe, at least at this point, but it's up to 130, 140 people have died so far. So, in other words, we don't have it, but and also not only better detection, but better medical facilities out there. Period. So there are some people working on coronavirus vaccines and protective mask companies. Some of the things that we tend to hear about. Now, somewhere here we do have something. Project Syndicate, one that we have with the coronavirus, cause a major growth slowdown in China. This is by Xinji Wei, and on the 27th. Also here, some fear that the timing of the coronavirus in China, breakout, start of the Lunar New Year, in the middle of traditional school break travels, will exacerbate the economic fallout for the epidemic, but three important factors may limit the virus impact on this China and global economy. The panic generated by the new coronavirus in Rona, which originated in Wuhan, one of the largest cities in China. After markets have followed suit, apparently reflecting concern about the epidemic's impact. My baseline prediction is that the coronavirus outbreak will get worse before it gets better, and this happens all the time with infection and deaths possibly peaking in the second or third week now of February. We're in the last week of January. But I expect that both Chinese authorities and the World Health Organization will declare the epidemic to be under control by early April. That he says, under this baseline scenario, my best estimate, the virus will have only a limited negative economic impact based upon Chinese GDP growth rate in 2020 is likely to be small and perhaps a decline in the order of 1/10 of a percentage point. The effects in Q1 will be big, perhaps lowering the growth by as much as 1 percentage point on an amortized basis. This is a number we've heard. Such predictions, recall the experience in 2003, a big decline in China's GDP growth in Q2 of that year was then largely offset by higher growth in subsequent 2 quarters, while 10 years full growth rate in 2003 was above. Now, it was 10% at that time, but also the Chinese economy was much smaller. Many investment bank economists overpredicted the epidemic's negative impact on growth, looking at the annual real GDP growth from 2000 to 2006. Very hard to see SARS effect in the data. Some fear that the epidemic's timing at the start of the Lunar New Year and the middle of traditional school break will exacerbate it. And what we're getting here is fragments. First, in contrast to SARS outbreak, China is now in the internet commercial age, with consumers increasingly doing their shopping online. And that is true actually in China, more so than, say, here in North America. And most of the vacations canceled today will probably be replaced by future trips, perhaps. Many factories scheduled stoppages during the Lunar New Year, no doubt about that. The government's just announced an extended holiday period, but many companies will find ways to make up the lost time, no doubt about that. Second, all reports indicate that Wuhan's coronavirus is less deadly than SARS, although it may have a faster rate of transmission initially. Equally important, the Chinese authorities have been much swifter than they were with SARS, but again, that's almost 20 years. Potential patients from the isolating from the rest of the population, that in terms increase the likelihood of lost economic impact this quarter, would be offset by increased activity the rest of the year, perhaps so. Third, whether or not China's trade negotiators realize the severity of the Wuhan virus when they signed the Phase 1 agreement. Now, this is what brings into question here, will China buy the potential amount of stuff, greatly increases its import of face masks, medical supplies from the U.S. and elsewhere. China could simultaneously tackle the health crisis and fulfill its promise under the deal to import more goods. Well, no doubt, there'll be more masks imported there will help the farm economy. A big if there. The virus impact on other economies will even be more limited. During the last half decade, many major central banks developed models to gauge the impact of a slowdown in China on their economies. These models were not built with central health crisis in mind. That has been a big problem. That now not only in the models, up-to-date models dealing with healthcare crisis, but with climate crisis there. And at the conclusion of this broadcast, we'll have Greta Thunberg and her brief address at the World Economic Forum. Anyway, the rule of thumb, the negative impact of a decrease in China GDP growth in the U.S. and Europe is about 1/5 as large in percentage terms. For example, if the current coronavirus epidemic lowers China's rate by 0.1%, then the growth in the U.S. and Europe is likely to slow by 0.2 percentage points. The impact on the Australian economy is twice as large because more is done there. And again, this is by 0.4% reduction in growth is still small. Some calculations assume the coronavirus does not spread widely to other countries. And of course, the impact on China and other economies could be more severe if the coronavirus were to last much longer than this baseline. Now, his baseline is rather long. Now, Mr. Xi Jinping there, writing there, he is a former economist at the Asian Development Bank, professor of finance and economics at Columbia Business School and Columbia University School of International and Public Affairs. We'll continue to follow the professor to see where we are going here with this. And that's the reason we are, as we run through some of the literature here. Now, modeling this is FX Street, modeling the coronavirus in the markets. Asia has one thing on its mind, the coronavirus, although we must consider U.S. politics fact that Bernie Sanders is now a firm favorite, not just to convincingly take out the Iowa caucuses, but is now 8 points ahead of Biden to take the full Democratic nominee toe-to-toe with Trump in live TV debate. We hadn't really talked much about this in the near term, although about hedging economic risk. There's no doubt there will be an impact on the Chinese economy, although it may not show up in official statistics until late March. The question is how the impact will be and what it will be the ramifications on the global economy and demand. In general, contrast between annual number of deaths between the coronavirus relative to, say, the cardiovascular disease, road incidents, and other and while there's a perspective here to me when I am looking at the economic argument, what is somewhat irrelevant. What we are trying to understand is the economic impact of shuttering transport links and imposing strict travel controls on Beijing and Shanghai, as well as effectively quarantining 14 cities, millions of people there. So a few markets holding a formal training in virology, trying to connect the dots is increasingly complicated, as with any formatic that is gripping markets and causing what they call risk aversion. Obviously, that comes from a cure and a plateau in a number of cases of people around the world, but the fact is that the incubation period is up to 14 days, where a virus can be contagious during this period, even if the host has no symptoms. Now, this is a very strange situation. It's no surprise to see rates markets move in up gear as traders start to anticipate full central bank response in the U.S. For example, in fact, the Federal Reserve is meeting right now and getting ready to conclude they will not raise the interest rates. We see a full 25 basis points cut by November from December, with 2 and 5-year Treasury yields lowered by 5 and 6 basis points respectively. In fact, we are back talking the Fed's yield curve, inversion curve again. The 2s versus 5s, a slight inversion, while 2s versus 10, these 2-year Treasuries, curve setting at 15 basis points below the 200-day. If you weren't for today's Q4, the Aussie inflation print would be so important. Aussie rate markets taking its variation more than domestic factors over global factors. They expect 24% implied probability of a cut at the March meeting. That's in Australia. While China's bond market is closed, we can see trading at 6.9858 there. Staying in the FX theme, we see all buyers of Japanese, etc., which make sense. Implied volume has moved with the VAX index at 18.2. And another index that we see this pair in a proxy of risk testing, 1% level of trade volume has we'd be very happy to sell into it. Buyers here, this is their situation there. Today, Japan has already reacted with a fall of 2% yesterday. At this juncture, the Nikkei's 225 futures indicates the Japanese index should open at 0.8% weaker. Chinese equity markets remain closed a lunar holiday. S&P 500 closed at 1.6 with volume some 17% above the 30-day average, and with all sectors lower on the day. So there we go. And we crude oil here $52.13. Oil price is a touch higher at $52.75. All eyes fall on crude as a test of $50.70. A series of low points there. We saw the Aussie S&P futures reopen overnight and setting at 1.6, lower from the Aussie 200. Now, a little different here with this question, and let's move along here. I'm getting quite a roundup here from China and what various China braces for blow to growth. This is from the Los Angeles Times, of all things, on the 27th of January. A blow to first quarter. Again, these numbers here. The financial capital Shanghai has ordered the companies not to reopen until the 10th of February, while manufacturing hub Xinhu has postponed return work of millions of migrant laborers for up to a week. Shenzhou is one of the largest manufacturing hubs where iPhone contracted Foxconn, Johnson & Johnson, Samsung have factories. Companies would receive support through measures such as encouraging appropriate lowering of interest rates at Central Bank of China. And crude oil has dropped to $1.37 according to this. Not only has the outbreak hit the Chinese New Year, when people make billions of trips to see the family, problems there. It's the lowest rate of the economy in China, 30-year low. President Xi Jinping has talked about as being grave. Then they've also had the swine flu that wiped out millions of pigs. So there we go. Rail transport fell 42% there. And one of the C-Trip, that's one of the larger travel agencies, said it asked global travel operators to refund passengers' pay. So things, even the Forbidden City, was very, very quiet. SARS killed 800 people and knocked the quarterly economic growth down by 2 percentage points from 11.1 in Q1, that was in 2013, to 9.1 there. So they are at 6 now, a little different. The big trend was that China's economy was still its early stage of an export up cycle when SARS broke out there. In 2019, the economy grew by just 6.1%. Exports over the last 2 years have been hurt by trade wars. But economic policy makers with less room to tinker with fiscal policy this time around compared with the SARS outbreak. That is from Michael Pittis. He's a professor at the Peking University. People are not going out to restaurants and bars, no doubt about it. Well, they can't. But anyway, after the SARS epidemic, China adopted an expansionary fiscal policy, including tax cuts to help the recovery. The sectors there. But at the Peterson International Economics wrote in a note, today China is running a large fiscal deficit and it doesn't have much room. And that has been echoed by many people there. And let's move along here to Bloomberg. Hopefully we can get this one up. Bloomberg, China's virus poses long-term economic threat. Here's Mohammed Rikim. They wrote this article a little earlier here. We go to many, assuming the complicated risks posed by the outbreak of the coronavirus to China, global economy and markets. Their focus has been rightly on the effectiveness of containing. That's been talked about there, and a reference back to SARS, not really there. And despite all these words, persistence, Xi Jinping expressing public concern, risk to public health because of the accelerating spread. No doubt about that. Concerns not limited to China. 10 other countries have the virus by this time. Is yet another unanticipated shock to the Japanese growth. Now, again, having many things. The pig crisis, they're hitting. These things occur in countries. It could occur here. Here is more climate related. Let's move on here. Scientific America. We won't dwell on it very long here. And this is from Scientific America. Experts warn of the possibility of sustained global spread of new coronavirus. This is, if the virus can't be contained, it'll start regularly circulating in populations like other common respiratory viruses. This is one of the situations here. Some infectious disease experts are warning it may no longer be feasible to contain the new coronavirus circulating in China. Failure to stop it, they're seeing the virus spreading in a sustained way around the world. There we learned about it. The greater possibility is that transmission will not be able to control with public health measures. This is from Dr. Alison McGeer in Toronto, Canada, who contacted SARS and who helped Saudi Arabia control several hospital-based outbreak of MERS. If that's the case, she said, we're living with a new human virus, and we're going to find out if it spreads around the globe. McGeer cautioned that because of the severe nature of the outbreak isn't yet known, it's impossible to predict. And this is the theme here. Pessimistic assertions come from both researchers and studying the dynamics of the outbreak, the rate at which the cases are rising, emerging in China. Infectious disease experts are poising, the first published studies describing cases to see if public health tools such as isolation and quarantines are as effective in the outbreaks as it was with SARS. And warnings come as the U.S. reported over the weekend finding of 3 more cases there. But this is just confirmed infections within China. Of course, up now at 6,000. Update this a bit here. The Health Minister, Mao Wawing, warned Sunday that the virus seems to be becoming more transmittable, and the country, which has taken unprecedented draconian steps to control it, was entering a critical stage. Chinese action includes shutting off flights, etc. Despite the enormous and admirable efforts in China and around the world, we need to plan for possible containment of the epidemic is impossible. That's from Neil Ferguson, infectious disease epidemiologist at Imperial College in London, issued a series of modeling studies for the outbreaks. There may be as many as 100,000 cases in China. That's what he told The Guardian on a newspaper on Sunday, adding that the model suggests the number could reach between 30 and 200,000 cases. We started to look at this and started at Crescent Analytics to do some work on it. Yes, that is very possible. There are almost certainly many tens of thousands of people infected, he told her. And that could very well be there. Now, the Bill and Melinda Gates Foundation announced that it is donating $10 million to respond to the virus. Half the money will be given to Chinese groups to help them in containment efforts. On the other half will be given to the African Center for Disease Control to fund its help African countries, quote, with new infections. Now, WHO, that's the World Health Organization, has not declared it a global outbreak as of yet. The outbreak is caused by a virus currently known as 2019 NOV that belongs to the same family that caused SARS. SARS infection caused an explosive outbreak that was in the early 2000s, infecting more than 8,000 people around the globe. We're already up to 6,000 in China to date and killing about 800. But treatments are better. Tools like quarantine, isolation, which are keys to controlling SARS, are unlikely to stop the spread of a virus that can be transmitted during a period from infection to symptoms. Now, this is a problem right here, is to how good these quarantines will be there. With some diseases like influenza and measles, people are infected, but they're not yet feeling sick. People who are still going to work in the school and riding public transport, etc. Dr. Nancy Messonnier, she's at the National Center for Immunization and Respiratory Disease at the Center for Disease Control and Prevention, said the agency knows transmissions of the virus within the U.S. may be on the horizon. Well, no doubt about it. We're learning far forward and leaning forward about steps away in an aggressive stance we can do in the U.S., she told Start. And yet those of us who have been around long enough know that everything we do might not be enough to stop the spread in the U.S. So this is looking at it from a long-term situation. It appears that the incubation period from time of infection to development of symptoms may be a bit shorter than that of SARS. This is from McGreer, citing a paper published Friday that described the transmission within a family in Hong Kong. With SARS, more people develop symptoms in about 4 or 5 days of infection. So this is, scientists have been studying the genetic sequences of the virus from China. They, in fact, been doing this also in Australia. Trevor Bedford, a computational biologist at the Fred Hutchinson Cancer Research Center, that's in Seattle, suggests that the estimates are sobering and point to continued spread. There's no doubt about that. Outbreak with reproductive numbers below 1 will peter out, but a number of groups have calculated the reproductive rate for this current outbreak, known by the term R-nucin or RO, in the range of 2 to 3. So this is one of the better papers here, reprinted by permission from Esta. I'm not making a prediction that this is going to happen. Idlesly be, and who is he? He is director of the Center for Health and Security, John Hopkins. There, this is Insby. Urged countries to start planning to deal with global spread for the new virus. Such plans need to include far more aggressive efforts to develop a vaccine, and that is where this is going. Now, this will end our part on SARS here. on canola virus, and we'll see where we are going with this, and we'll do some PCIs here, and then we'll do the markets. We won't bore you with this. Let's go back to doing our PCIs. This is from Market Organization, as we usually do, and we have a number of those. Let's see where the current economic activity is going here, and we'll look at this and see which ones we hope. We'll look at Japan, and I think we'll look at the U.S. first, so we'll get this kind of in here. I was at 50.2. It was 50.8 in December, a 2-month low. And the flash Eurozone manufacturing, something we look at, is at 47.5. A 5-month low, it was 46.1 in December. The manufacturing Eurozone flash manufacturing PMI at 47.8. It was 46.3 there. So the PMI for January indicates that the Eurozone economy failed to pick up growth momentum at the start of 2020 because business activity increased at a same slight pace as was the final month of 2019. Underlying data shows that the growth of service activity eased slightly, while the manufacturing sector moved closer to stabilization. Combined growth of the big two Eurozone economies picked up, but this was offset by near stagnation across the rest of the single currency. Flash ISH market Eurozone composite PMI was unchanged at 50.9. The overall expansion in business activity was again centered on the service sector. That said, service sector rose slightly weaker pace, while manufacturing retained its contraction. The rate of input cost inflation quickened to an 8-month high, and sharp accelerated increase in costs was recorded there. And in the big two, Germany and France, with combined growth at 5-month high. Germany in particular showed signs of recovery, a strong expansion in service activity, and less market decline, whereas in France, the performance of the economy continued in January as both output and new orders rose for the 10th straight month. The rest of the Eurozone showed signs of weakness. Output slowed to 6.5-year low. Yeah, so the comments here by Andrew Harker. While the year may have changed, but the performance of the Eurozone economy was a familiar one in January. Output growth was unchanged, and December it picking up in a service growth there. So basically about the same, not much in the Eurozone new for this year. Ongoing muted pace of output growth reflected a lack of momentum in new order flow. There are signs manufacturing new orders near stabilization, the softest since November 2018, while the rate of growth in output and new orders remained muted. At the start of the year, companies were increasingly confident regarding the year ahead. That's what Brexit here. Confidence in the outlook for output encouraged companies to take additional staff. That's a good sign. Raises in operation capacity, depletion of backlog work, and again, as France and Germany here are the ones that continue to grow, while business confidence across the single currency jumped to a 16-month high. So overall in Europe, things were pretty good. Let's go, I guess, to the U.S. now, and then we'll backtrack to this is the flash U.S. composite PMI, and we'll just give the index was at 53.1. It was 52.7 in December. This is a 10-month high. The service business activity index at 53.2. It was 52.8 in December, another 10-month high. Flash manufacturing at 51.7. It fell a little bit, 52.4 in December, the 3-month low. The U.S. Manufacturing output index at 52.4. It was 52.4, unchanged. And U.S. private sector firms indicated a fast expansion of business activity in January, with the pace of growth accelerating to a 10-month high. Adjusted seasonal factors, the flash U.S. composite PMI output index posted at 53.1 in January. That was up from 52.7 in December to indicate a quick rise in output. The increase in output was solid overall. The pace of output growth accelerated. All the new orders rose modestly. The upturn in sales was a third in many months and signaled strong client demand compared to the second half of 2019. Service providers were burgeoned by further business activity and increased their workforce numbers at a quicker rate. Here, a degree of optimism reached a 7-month high. However, business confidence remains well below serious trends. The U.S. Manufacturing PMI noted a slower improvement in operating conditions in January, as signaled by a slight dip there. The Purchase Manager Index from 52.4 to 51.7 in January. Notably, the latest upturn in the healthcare sector was the softest since last October. Although output continues to rise at a modest pace, new business growth was only marginal. Needlessly, goods producers continue to increase their workforce numbers at the start of 2020, albeit at a slower pace. The soft rise in employment coincides with signs of easing capacity pressure in January. At the same time, price pressure eased across the manufacturing sector. A weaker increase in cost burdens also there. And let me head back up here a minute. The comments here from Cyan Jones. The recovery growth of momentum across U.S. private sector continues to quicken at a start in 2020, with overall output rising at a sharper pace since last March. Sharpest pace. Needlessly, the underlying data highlights a manufacturing sector that is not out of the woods yet. No, it's in a recession. Service providers also registered a slow upturn in new business, which fed through to softer increases in output change. On a positive note, private sector firms increased their workforce numbers at a faster rate, with some expressing frustration at the lack of available candidates to fill vacancies. Job creation reflected stronger optimism regarding future output, although firms remain weary of the potential for headwinds in 2020. Business confidence creeped high for the second month running. Further signs of historic soft price pressure will come as no surprise to the FOMC, who meets, they're meeting now. Muted increase in cost and output changes there. Now let's go to Japan, where we started off. The Japanese economy rebound started 2020. The index at 51.1. It was 48.6. That's the flash output. Business activity index at 52.1, and it was 49.4. Above 50 is stabilization. Manufacturing in Japan at 49.3. At the final in December was 48.4. This is Japan Bank Flash Japan Composite. It's published on a monthly basis. And what the economist said there, Joe Hayes, positive signs emerged from the Japanese economy at the start of 2020, with flash PMI data pointing to domestic-led economic recovery, while official data are not yet to confirm. The fourth quarter looked on a track to register an ugly decline in GDP. The flash numbers will certainly allay fears for now of an impending technical recession in Japan. The recovery was driven by the service economy, where demand improved solidly in January. Consumer-driven growth will once again be a vital force in 2020, as the PMI data suggests that the industrial sector weaknesses still lingers, and how the coronavirus will affect us be very interesting. Needlessly, manufacturing confidence edged up in January in the wake of easing of trade tensions with China, but China has more problems. Some optimism regarding Japanese relations with Korea. And panelists suggest that demand conditions in semiconductor industry have picked up, is a promising note. So this is basically where they are here, and that is Japan. And let's go back and do the numbers here, and we'll what we have right now. And this is on the 28th. Well, anyway, we'll go ahead and do it. The FTSE was actually up 8.59 there. And in Amsterdam, they were at a negative 1.33. In France, they were at 0.60 negative. The DAC was down also at 26.26. And Eurostas negative 2.31. And in Madrid, they were actually at 18.60. And let me just skip over here. In Bombay, they were at negative 188.6. And Hang Seng courses in Hong Kong was at 40.52. And the Nikkei at a negative 127.80. And let's go back and do the Dow. Oops. Kind of skip around a little bit here. It closed, and this was on Monday's closing, at 453.93. It's since rebound. And the Nasdaq was at a negative 175.60. Incidentally, the volume there on Monday was 28,535 on the Dow Jones. And the S&P 500 was down 51.58. I think we got the latest petrol here, but we'll go ahead and do it. And it was down 64 cents at $58.68. Brent crude. The futures of WTI futures were at $52.83. This is Texas Intermediate, as it's called. Anyway, T-Boone Pickens' ancestors are still happy here. Gold was up $21.60. Let's get on the PM. It was up $15.80 on the Forex at $1,580.10. Natural gas was down a penny. That is the numbers that we have. They are changing. They are ever changing, as one will say. But basically, the market has back stabilizing. It got some back on its Monday, but we can expect this to go up and down. A lot of it will depend on what happens with the coronavirus and where it is going. And we keep looking at it, and a bunch of models being here. Now, this is actually one from the medical library of the National Institute of Health here, and these are some animal models for SARS and MERS, and we're big here at models, and the emergence of severe acute respiratory syndrome, that was STARS, and the Mideast respiratory, that was MERS, the two strains of animal coronaviruses that cross the species barrier to infect and cause respiratory infection in humans. Within the last 12 years have taught us that the coronavirus represents a global threat but does not recognize international borders. We can expect to see other novel coronaviruses emerge in the future. And this is really what this is all about. And again, the members of the coronavirus family infect a wide range of animal species in nature, and most are limited in their hosts. So again, this is we have better data now than before, period. And again, this is and these are animal models here. I won't get into much of this. Most of this is what we would be looking at: people infected with SARS, Corona V, with symptoms that include fever. Respiratory signs include non-productive cough, and chest radiograph abnormalities evident in most cases. Now, evidently, the diagnostic for this takes about 2 hours, so they're doing many things. I would assume they are prolonged infection with destructive and disquantitative levels. Anyway, Some of the things here, clinical signs are here, virtual replication, pathology, depends on the species. Anyway, this is some of the data. There's a lot of data out here on this, but again, this is quite a bit, and as we progress, we'll be bringing you other information. We'll switch now to climate change and Greta Thunberg from the World Economic Forum. We'll tap it on the N. And as we normally say here, those in business, have a good rest of your week. And for the consumer, the eye is on the prize, more or less on the web, so you can find out what's happened with the coronavirus. And again, the precaution is to wash one's hands, period. And I would say avoid public places as much as possible. Going to work and out of work, we don't have anything there. But on our political side, that's Bostonred, we'll have more information on this and other world events as the Trump administration unveiled a peace deal for the Mideast. We're not certain where that is going, if it goes anywhere, and whether or not it would have any effect on economies. We don't know about that at all. The impeachment inquiry, which is going on now, they have moved past their opening statements and they'll be asking questions. Has that had any effect on the markets? Not very little. In fact, the approval rating of President Trump has eked up percentage points. I think he's at about 47 now.
Her to the stage. Sorry.
1 year ago, I came to Davos and told you that our house is on fire. I said I wanted you to panic. I've been warned that telling people to panic about the climate crisis is a very dangerous thing to do. But don't worry, it's fine. Trust me, I've done this before, and I can assure you it doesn't lead to anything. And for the record, when we children tell you to panic, we're not telling you to go on like before. We're not telling you to rely on technologies that don't even exist today at scale and that science says perhaps never will. We are not telling you to keep talking about reaching net zero emissions or carbon neutrality by cheating and fiddling around with numbers. We're not telling you to offset your emissions by just paying someone else to plant trees in places like Africa, while at the same time forests like the Amazon are being slaughtered at an infinitely higher rate. Planting trees is good, of course, but it's nowhere near enough of what is needed, and it cannot replace real mitigation and rewilding nature. And let's be clear, we don't need a low-carbon economy. We don't need to lower emissions. Our emissions have to stop if we are to have a chance to stay below the 1.5 degree target. And until we have the technologies that at scale can put our emissions to minus, then we must forget about net zero. We need real zero. Because distant net zero emission targets will mean absolutely nothing if we just continue to ignore the carbon dioxide budget that applies for today, not distant future dates. If high emissions continue like now, even for a few years, that remaining budget will soon be completely used up. The fact that the USA is leaving the Paris Accord seemed to outrage and worry everyone, and it should. But the fact that we are all about to fail the commitments you signed up for in the Paris Agreement doesn't seem to bother the people in power even the least. Any plan or policy of yours that doesn't include radical emission cuts at the source starting today is completely insufficient for meeting the 1.5 or well below 2 degree commitments of the Paris Agreement. And again, this is not about right or left. We couldn't care less about your party politics. From a sustainability perspective, the right, the left, as well as the center have all failed. No political ideology or economic structure has been able to tackle the climate and environmental emergency and create a cohesive and sustainable world. Because that world, in case you haven't noticed, is currently on fire. You say children shouldn't worry. You say, just leave this to us. We will fix this. We promise we won't let you down. Don't be so pessimistic. And then, nothing. Silence. Or something worse than silence. Empty words and promises which give the impression that sufficient action is being taken. All the solutions are obviously not available within today's societies, nor do we have the time to wait for new technological solutions to become available to start drastically reducing our emissions. So, of course, the transition isn't going to be easy. It will be hard, and unless we start facing this now, together with all cards on the table, we won't be able to solve this in time. In the days running up to the 50th anniversary of the World Economic Forum, I joined a group of climate activists demanding that you, the world's most powerful and influential business and political leaders, begin to take the action needed. We demand at this year's World Economic Forum participants from all companies, banks, institutions and governments immediately halt all investments in fossil fuel exploration and extraction, immediately end all fossil fuel subsidies, and immediately and completely divest from fossil fuels. We don't want these things done by 2050, 2030, or even 2021. We want this done now. It may seem like we are asking for a lot, and you will, of course, say that we are naive. But this is just the very minimum amount of effort that is needed to start the rapid sustainable transition. So either you do this, or you're going to have to explain to your children why you are giving up on the 1.5 degree target. Giving up without even trying. Well, I'm here to tell you that, unlike you, my generation will not give up without a fight. The facts are clear, but they are still too uncomfortable for you to address. You just leave it because you think it's too depressing and people will give up. But people will not give up. You are the ones who are giving up. Last week, I met with Polish coal miners who lost their jobs because their mine was closed. And even they had not given up. On the contrary, they seem to understand the fact that we need to change more than you do. I wonder, what will you tell your children was the reason to fail and leave them facing a climate chaos that you knowingly brought upon them? That it seemed so bad for the economy that we decided to resign the idea of securing future living conditions without even trying? Our house is still on fire. Your inaction is fueling the flames by the hour. And we are telling you to act as if you loved your children above all else. Thank you.
Thank you, Greta, for those stirring and provocative words and for your leadership on this issue. I am going to start by asking our panelists a number of questions. We also want to open it up to you by the end of the session. And if you